So here's part 2 of the random analysis, and as I said at the end of part 1, this has trended high, low, lower, high, lower, high, low, high, high, low, higher, high, high, low, lower, high, lower, low, lower, high, lower, low, and close between that low. So this has a candlestick trended down on the H4. Just remind myself what D1 did. D1 had broken the resistance of the final candlestick trend to the downside, and closed through it, which is bearish, and you can clearly see we're below, so the indicator confirms that, the histogram. And notice that my old diehard doesn't really confirm it, although because at this stage it's still closed bullish, and this is just turning bearish, whereas this one has closed bearish and is continuing bearish. And the fact that that's lower than that one is lower than that bar, in other words it's bigger, is also confirming, very strongly confirming the bearishness. And I'm still learning the nuances of this. As I said, this is 15 years experience. This one is about 3 or 4 months, but it's proving to be absolutely fantastic. But never assume anything until you've tested, and never, once again the disclaimer, never trade anything that I recommend or suggest may be happening. I never make trade recommendations, but obviously during analysis I'm going to have to say what I think my analysis is telling me the price will do, by its very nature. So yeah, we've already connected those. That should have been tightened up. That would have been like that, there to there and there, and then we can tighten it up when this high is broken by this candle here, which is why I've tightened that one up to that point at that point, and whoops, and then it clearly broke down, you can see that, and the daily, as I said, has broken the daily resistance, this one here, to the downside. It hasn't held as support. I mentioned market profile and the value there. So really we need a breakdown through the support of this candle, which is the highest here on this H4, because it's the H4 has actually candlestick trended up, and we haven't broke candlestick trended down. Let's have a look at that high that is the candlestick trend high. God almighty, something going on with my internet connection. High, low, lower, high, lower, low, low, high, higher, low, higher, high, and close. Now that should be tested. It's tested and clearly failed. So the resistance hasn't held as support. We now just need this support here that's forced the price low, high, higher, low, higher, high to be closed below, and then I think this will potentially collapse. We've got support below, so we need to be careful of that. And remember, I'm always looking for gaps. So this is a very bad potential trade at the, before it closes below this one. I hope that makes sense. So we're always looking for gaps. If it closes below this one and doesn't test this one, sort of closes literally, it can close a micro pip below, then pull back, then I'd drop to the lower time frames and see whether there's any way to trade that gap there. 22 pip gap. So there you have it, guys. This proves that the data wasn't loaded previously, and I haven't analysed this chart before. This is a totally fresh look at a currency pair for me. I just thought I'd do it as an exercise to show you what I do. And now you can see you've got a downtrend going on here, clear, high, low, lower, high, lower, low. And I did look it up the other day. This is the distribution phase when we think the price is going down. This is where the big boys are manipulating the price. There's no other way to put it. And the accumulation phase is the bottom one, when you're expecting to go up. Accumulation, distribution, and that's it. I think it was no, that's not the Dow theory. I think I was reading something about Wyckoff or something, and found a chart of his. So that's it, guys. And you can clearly see an H1 reversal, strong reversal, high, low, high, low, lower, high, lower, low, and there's the low, high, higher, low, higher, high, that little green candle there. It was broken by this, and that does count, by the way. That's an outside bar there. It can be an engulfing bar, it doesn't matter. It's broken the uptrend with a new downtrend. Then you get to the reversal test. I'm not familiar with this currency pair, so it looks pretty spiky. So you know, there's a lot of spikes here, which suggests manipulation, and as I say, the accumulation for the long trend and the distribution, sideways motion you could call it, for the short trend. And we've broken another level of support here, you know, clearly 1, 2, 3. We've broken and closed below a level of support there, and as you can see, once again the price has popped up, which we expect to happen. Remember, that's why I always follow this method. You could call it the 1, 2, 3 method, I suppose, or whatever, right down to the 1 minute chart to enter the trade. Okay, I never ever enter a trade. Or occasionally I might enter on a 5 minute, and it depends on the volatility and the particular time of day. But I tend to try and always get right down to the 1 minute, so I've got all my ducks in a row. Alright, thanks for watching, and that's part 2. If I think of anything to say in part 3 or a part 3, I will do it later.